Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmaya.
Hi everyone, I'm Avan Dabash. Let's kickstart the show by bringing on board then our three experts who will be joining in today. Well, Manish Santhalia, Senior VP and Head Equity PMS at Motilal Oswal AMC PMS will be with us. There's also Nipun Mehta, Founder and CEO at Blue Ocean Capital Advisors, and Sandeep Wagle, Founder and CEO at Palm Wealth, joining in on the show. Nipun, would like to start off with you, and what exactly is it that you're expecting this time around from the earnings season? Where are we going to see the surprises? Where are we going to see the disappointments? And what's going to be the liquidity situation?
Well, the earnings season is of course important. So while the markets have a clear focus as far as the election results are concerned, I think clearly an eye will be on the results as well. I think the fourth quarter generally is always the best quarter for a lot of sectors, and which will mean that you could see some results which could be better than the December quarter results that are there. I think the key is during this quarter you will see the impact probably of a degree of rupee appreciation that had happened, which will have its marginal impact as far as IT companies are concerned. To some extent, I mean, most export-related companies could get marginally impacted. But in terms of potential winners or the segments or sectors which probably could show decent results, you could continue to see IT, you could continue to see pharma. Where you might not see the best of results probably could be autos and auto ancillaries. Real estate might not show up the best of results. Cement again hasn't seen significantly higher volume, so there again it could be a mixed bag. Cap goods and infra again could be sort of suffering under the burden of interest costs and lower execution, and that's where you might not see significant uptick that could be there. FMCG has to an extent been suffering on volumes. They haven't been very exciting and encouraging, so there again you might not see a significant uptick in terms of margins or top line growth. So
right. Okay, Sandeep Wagle, come in on the market technicals. Again, a divided market. Risk is taking it slightly easy. Defensives are making a comeback. It's becoming more like a habit. If risky beta sectors are moving up, defensives they take it easy. Every time defensives are moving up, beta stocks are taking it easy.
Well, Nikunj, this is nothing new, and as far as I am concerned, the trend of the market is not under threat. Yes, 150 point correction on the Nifty, which we are not used to, even that may sound a deep correction, but it should not be treated that the trend is done and we are now on the way down towards 6,000. I don't think so. Yes, 6,600, 6,650 is a very, very strong support. So 6,650, 6,600, somewhere between that is a support area which I don't think will be breached. So that talks of another 50, 70 points on the downside. On the upside, I still feel 6,800 is acting as a very strong resistance, 6,800, 6,820. So we are talking of that 150, 180 point range, and being a truncated week, I don't expect that to be broken. So stock specific moves still with a bullish bias. Yes, some of the banking and the auto stocks are looking good, but if you short them, the bigger moves don't come in. So I would not be that comfortable blindly shorting. Yes, you can play on both sides of the market, but still the trend is intact as far as I am concerned.
Let's talk about the stock that was in focus all of today on account of its numbers, and that was clearly Infosys. It certainly beat street expectations this time around. Profit growth was close to 4% at 2,992 crore rupees. You had the top line growth which remained a little bit muted. The dollar sales in fact dipped something like 1% this time around. But the surprise was clearly in the FY15 guidance, with the dollar revenue seen growing anywhere between 7 to 9%, and that's clearly higher than what the street was expecting. Apart from that, you also did have the margin expansion of close to 50 basis points, and that certainly is what thrilled the street as well. Nipun, run us through whether or not this is a one-off in the numbers for Infosys and what your projections are for the IT pack as a whole.
Well, I don't think it's a one-off. In mid-March, you did see a kind of muted guidance coming in from the company. Given that fact, you saw marginally better than expected margins and overall results. I think employee attrition has been a problem that has been there with the industry, but client additions have been decent, fairly decent, including large clients that are there. So our sense is FY15 might not be as bad as to some extent the street expects, which is for Infosys. But overall, as an industry, as I've said earlier as well on the channel, I think while there has been an overreaction as far as Infosys was concerned, I think overall as an industry, the guidance cannot or is not so negative. You are likely to see better results or fairly consistent results coming in from the biggies of the world, the TCS, Wipros and the HCL Techs of this world, both for the fourth quarter as well as for FY15. So our sense is the industry should be showing up healthy results over the next 4 to 5 quarters as well.
The big story clearly was United Spirits. Diageo has triggered another round of open offer. Manish, I know you are a happy shareholder of United Spirits, but my understanding is that you plan to tender your shares in the open offer. So some would argue why?
Now the whole point is they are very long-term investors and we are professional money managers who cannot see beyond 2016, given that we are managing public money. So we have to justify valuations. I think, first of all, the numbers of 1200 crores should be there. But, at 36, 37 times, it would be offering fair value. But Diageo would be really taking a 5, 10, 15-year call on that particular company. And I have no doubt that with 40% market share of the Indian liquor market, this company is going to go places. But maybe there could be a better time. There could be some time correction post the open offer. Maybe at that given point in time, as we run closer to 2016, maybe there'd be a good time to buy the stock again.
But Sandeep would like to just bring it to you with some of those high beta names. The last point that we flagged off, is there a short-term reversal in trend for any infrastructure stocks that you're spotting?
Not really. I mean, that is the way they move. I'm not very, very clear on any of the patterns. So if you ask me a reversal in trend, I will not go with that theme. I would prefer to wait and watch.
Nipun, do you think in the short term, the bank nifty or for that matter, banks, they've hit some kind of an wall? And before you answer, let me give you some pointers really to think over. Bank yields are at 9%. Inflation is not coming down. Reserve Bank of India is hawkish and NPAs are still high.
Yeah, but I think what's critical is, again, the provisioning that could be there. And I think that's something that, given the year end, might just show some marginal respite. But our sense is, yes, probably we are still not completely over as far as provisioning is concerned. There are still 1 or 2 quarters to go as far as provisioning is concerned, as far as a lot of the loan rollovers are concerned. So that's where you're going to see some amount of challenge as far as banks are concerned. Yes, probably the hawkish stance of RBI is one leg of it. Probably the investment cycle not still turning around is another. So our sense is, yes, the sector has run up. The bank nifty is at its all-time high, but very clearly there are fairly good headwinds that are there, and so you'll see probably with IndusInd results and some of the private sector bank results. You saw DCP results which were fairly decent. IndusInd might be as good. So some of the private sector banks which will continue as have been in the last few quarters, probably showing up the same kind of results. But the PSUs is where you could see some amount of headwinds that could be there, and that's where you'll probably see some amount of profit booking coming in. So yes, headwinds there for a couple of more quarters at least till you see provisioning reducing.
Speaking of banking, Manish, you had acquired SBI closer to 1600. Now it's above those 2000 levels, which means that you are in the money on this stock. Do you think that it's time to get out, or that SBI could even touch levels of 2300 to 2400?
The average price is much lower than that what you have said. But what I'm trying to say is that we have stayed with State Bank of India for a very long time. We have seen State Bank of India move up to 3500, come back to 2000, move up to 2800, come back to 1600. Today we are at 2000 odd level. So there is really, no reason to sell State Bank of India when things are looking up for the economy as a whole, for the banking sector as a whole. Probably in the next 1 or 2 quarters, things would stabilize as far as the NPAs are concerned. They are doing a lot of things regarding, sale to asset reconstruction companies. So on a price to book at about 0.8 times, I have no reason to sell. Maybe if we move closer to 1.5 times price to book, there could be a reason to sell State Bank of India, but that's not the case as of now.
Sandeep, another large cap stock which probably moved in the background today and was not noticed by many, Hero MotoCorp, 3% up from the day's low.
Well, I've got a mixed view in this sector. I'm bearish on Mahindra. I'm seeing a correction. Maruti is also not giving that inspiring moves. So, Hero MotoCorp, I would talk of a limited upside. Yes, it has moved up smartly, but I don't see Hero MotoCorp crossing its previous swing high of 2300. So, at 2220, you can talk of a 3 to 4% trading upside. But at least in the short term, I don't see this being crossed. The bigger move would come in when the weekly close happens about 2300. Then we can talk of a 2550 target. As of now, I would restrict myself to a 2200 to 2300 range, in which I think this stock is likely to move in the next few days or weeks.
Let's find out what exactly the dealing rooms are advising in terms of specific stocks. Joining in from our research desk now is Gargi Parikh. Gargi.
Well, 2 buy recommendations coming in from dealers just ahead of their earnings. The first one is DV's Lab. Some buying expected there. In fact, some positional buys that dealers are indicating at this point. There is expectation that the March quarter earnings are going to be pretty robust. In fact, they are expected to beat the street estimates. On the back of that, we could see some buying coming in DV's Lab. The other one is Reliance Industries. Just ahead of the earnings, there could be some buying whenever we see dips in that counter. In fact, again, in this case too, the earnings are expected to have some kind of a positive surprise, and dealers indicating that there could be buying ahead of the numbers. So, on the back of that, 2 buy calls coming in from dealers, DVs as well as Reliance Industries.
Sandeep Paglia, what are your top trading ideas for tomorrow morning?
Nikunja, buy in a future retail, stop loss of 93, target of 117. And a sell in M&M, stop loss of 993, target of 950.
Manish, of late we've seen a sort of a trend develop in the cement basket. Are there any cement names that excite you of late?
I don't know, some of the names that we like are already fully priced. So something like a Shree Cement looks good, but, very good management. The EBITDA per ton would be closer to 1500, 1600 rupees. So if we were there to be in cement, we are not there in cement currently, but, we would really want to play the North Indian cement names, because it's a funny situation, North India cement companies are making record profits per ton, EBITDA per ton, whereas South India cement companies are making record losses. So that's the whole game, So yes, the eyes are there on North Indian cement companies, but we want to really see into volume growth coming up before we want to, buy into any of these names. Till then, it's just a status quo and seeing the whole situation.
Yeah, Manish, the question is, do you think that cement stocks are priced to perfection?
Some of the larger names are. So something like an Ultratech would be there, or a Ambuja would be fully priced. Even a Shree Cement at 6,000 odd rupees, closer to that, is more or less fully priced. So, how can you, I don't know how one can give really more than $130 EV per ton on a cement company. I understand that's the beginning of a new cycle, but where is the visibility about the beginning of a new cycle? It's hope that the new government would come in and there would be a revival of investment cycle. So let the whole thing play out.
Nipun, give me some names, no sectors or themes. Where are you allocating capital? Where are you happy to allocate your personal capital?
Well, I think you need to segregate that into the period before the elections and post the elections. You're going to see fair amount of volatility before elections. So clearly it could be just an opportunity to clean up some part of the portfolio. But when you look at it longer term, yes, probably clearly private sector banks, which is let's say an Axis Bank or an ICICI, some of the capital goods names like an L&T make a lot of sense. So I think rather than generalizing, you need to look at it from an opportunistic point of view, from the shorter term and how to take benefit of the market, and in the longer term, given a particular kind of scenario that could be building up for the economy.